climate change, technology coming for your jobs. That sounds risky. Or if we just call it, frankly, what lots of this is, which is do more with less, make more money, lose less money. Let's just call it what the thing actually does. I think you'll find us in the future, like building out additional fund strategies that are climate thematic, that are probably run by folks who are best in class at those slices of the capital stack, and that leverage data to really go meet the moment. And that's where I think this really starts to flywheel, right? So call it what you want, call it climate, call it your, I don't know, energy abundance, on and on and on. We'll go meet the moment with the data, with the structure.
Hey everyone, welcome to another episode of Clean Techies. If you are new here, each week, Somel Agarwal and myself, Silas Maynor, publish a discussion with leading climate tech founders and investors to distill the insights that they've gained through years of experience. This way, you can navigate your climate journeys more successfully and avoid the mistakes that they made. Today, Somel and I are excited to share our conversation with the one and only Sophie Purdom. For those of you who are unaware, probably not many, Sophie co-created Climate Tech VC, referred to as CTVC, with Kim Zou. The weekly newsletter of deal flow, updates, and deep dives quickly became canon in the climate tech world. Again, most of you are probably familiar. And now it reaches over 75,000 readers. Eventually, she went on to announce her own fund, Planeteer Capital. And at the time she did this, Somil and I actually recorded an episode, linked in the description, reacting to it with our excitement. She came on the pod to discuss raising it, where she's focusing, the new era of climate tech that we are in now, and really excitingly, she gives us a teaser of where Planeteer is headed in the future. Stick around to the very end of the episode to hear about that. And we didn't want to gatekeep Sophie, so this entire episode is available to the public. Be sure to share it around with your friends. All right, enjoy the episode. All right, welcome to the pod, Sophie. How you doing today?
Hi, I'm so good. Happy Monday. It's sunny and bright here in New York, so good to be with you guys.
It's not quite as warm in Wisconsin. It is sunny, but it's only, I think it was 42 degrees this morning. So the beauties of being in Wisconsin in May. But
climate change can help you out there.
Yeah, well, I don't know. We'll see. It's been pretty sad to see hardly any snow these past few years. But I guess, let's open up with, talk to us a little bit more about where you think climate tech is today. This is something we've been grappling with, is trying to figure out, with the new administration, how people are approaching it, how they're branding it. So you've got a better handle on these things than most people. So tell us more what you think.
Yeah, look, I think branding is a lagging indicator, right? And I don't actually think that trying to rebrand climate is that intellectually interesting or a good time, good use of folks' time. So that's my hot take coming in on all of this. Fundamentals hold true, right? What the heck is climate tech in the first place? Well, it's a theme, not an industry. And within that, right, climate tech identifies a whole bunch of technology areas that we think are more or less impacted by shifting climate impacts. So all of that still holds true, and is maybe even more true. I think what maybe the cart got ahead of the horse a little bit insofar as folks' exuberance around all things green premium, all things voluntary, removals markets, and all sorts of derivative implications of that. So adding lots and lots of nice to haves kind of on top of the fundamentals. And as in any period of expansion and contraction and shifts in willingness to pay, we're in a contraction period now where we're going back to the core. But, we've been writing about it in the CTVC newsletter with this phrasing of back to basics. And to us, that means clean energy generation, and everything kind of derivative and thereof. And also increasing lots of risk mitigation. And so that's where we see this kind of core back to basics climate tech space shifting into the future. You can call it whatever the heck you want. And honestly, I don't really care. That's fun. I love hearing all the crazy ideas out there for what to call it. I heard electron economy the other day. That gave me a good old giggle. Yeah. But I think it's fun, and like everyone's got to put their flavor on it. But fundamentals strong. What's dead is all things green premium, right? And so when that happens, I think cream, rises to the top, water finds its level. And frankly, I'm pretty excited about markets like that, because for our structure of investing, which is extremely long-term, right? We're partnering for 10 years plus with these teams. They're going to pivot time and time again, right? What happens over 10 years is incentives change, willingness to pay changes, the physical world changes. And so we're not investing for like arbitrage periods where the going's good and where there's a lot of, ZERP era funding or a lot of enthusiasm from kind of government handouts. We're looking for fundamentally like strong economical businesses that are going after a like long-term systemic shift. So anyway, we can get more specific about that, but that's my, I guess I'm not even that old, but that's my like old person take on do we rebrand climate tech or not?
Yeah, I just out of curiosity, do you think it was pretty important that we had this kind of frothy period where everybody wanted to be in climate? Do you think that that really, in the long run, is going to help us move forward in this industry now that a lot of people are kind of leaving, the tourists are leaving? Do you think it was still valuable?
Do I think it was still valuable? Yeah, and also it's not like it's over, guys. So please don't be spreading that false narrative either. Just to benchmark us kind of like back in reality, right? Like vibes are vibes. People will write whatever they want on Twitter to get like, clickbait stuff. But if you just look back at the data, there's more deals getting done year over year now than ever before. So does it matter? Yeah, we had amazing talent that kind of flowed in, bunch of enthusiasm, tons of enthusiastic, frankly, just like checks, right? And willingness to spend. So I think it's great that climate captured some of that. But now we're seeing founders who are building resilient businesses for the long term. We had over 1,000 new companies raise money, right? So the first rounds raised last year in 2024 alone. And so I think the caliber of founders is strong. It's also interesting to try and parse those founder personas out a little bit. And so we see there being at least 4 different founder personas, some of whom are much more reactive to the macro, broader market than others that are much more micro interested in their own timelines and motivations. For example, did they just finish their PhD program or not? Is it time to go commercialize? They're not really, thinking about other opportunities. These folks are locked in. It's the one thing they're going to be doing with their life. They're experts. Versus perhaps we have some folks who the world is their oyster in terms of, do they want to go work on AI or climate? Do they want to go get a, $500K paying job at, big, whatever, fintech shop, or do they want to go launch a climate, adjacent business? Those folks are, spending less time building in climate at the moment. And I don't think that's either good nor bad. That's just cyclical. But the technology first people who are often, like I said, kind of coming out of a lab or not, the frankly climate first folks, which we shouldn't forget about them. They often tend to skew a little earlier career, more motivated. Lots of those people have gone on to build some absolutely incredible businesses. They're not going to shift or change. We've got the kind of experienced tech style people who are mostly like on to the next thing, but still not all of them. And then we have the operators who've been in industry. This is an area that at Planeteer we get really excited about, who know the customer because they often were the customer and they've got an itch to scratch and they deeply understand the go-to-market. They know all of the buying, ins and outs, and they're off to go solve a specific problem that then compounds and that you can build a real independent standalone company on the back of. So we like those people. They should call me if they hear this podcast. And we've been investing rapidly in that founder persona over the last 6 months in particular.
Hey everyone, quick interruption. Throughout doing this show, one of the number one success factors our guests have mentioned is the importance of getting the right talent in place. And today's discussion with Sophie is no exception. If you'd like help doing that, getting the right talent at an affordable rate, reach out to ErthTech Talent today. This is the search firm that I run where we help climate tech companies hire the best talent, and we do it for way, way less than traditional search firms, about half. I've been in this business for over 5 years with over 70 placements. So if you want help making sure that you assemble the right team while saving time and money, reach out today by emailing hello@earthtechtalent.com. That's earth with no A, ERTH, techtalent.com. And reference this ad for a special discount on your first search. All right, back to the episode.
I'd love to later on really double tap on how you went about sourcing that talent and finding those talent pools. But before, staying on the idea of trends. So I respect that a lot. I spent a lot of time early investing. And so I totally agree. There is the view of this administration, but there's the view of what just builds a company that'll go sort of the 8 to 10 years minimum, right? And I think the ability to predict trends that span that long is actually a fairly complicated practice and tough practice. especially for how much change climate tech as an industry is going through. So I'd love to hear from you how you think about those trends and what excites you that seems durable over the next 10 years. And also, we were talking about this before, might be shaping some of your future momentum as well.
Mm-hmm. Yeah. So ultimately, we're looking at defensible technologies or services that have either good unit economics or future potential for unit economics that are pretty commercial right out of the gates.
Okay.
And so it's kind of easy to say, well, that's not. So we choose to not participate in the type of venture capital that's funding a lot of science risk, right? Or fundamentally, and maybe those ultimately are great outcomes. They're just not the ones that we go after, but
Right.
we don't back the binary, this needs to be true in order for there to be any value on the other side, right? So completely new forms of energy generation, for example, or entirely new vaccine development that unlocks, I have no idea, enteric emission,
Right.
mitigation. We like to go after niche markets often that are defensible, that ideally, and this is my like ideal state, you rarely get all of these pieces in one company, right?
Yeah.
That you sum together adjacent markets as you're kind of gaining momentum, you're getting to kind of some version of economies of scale. And so you're able to defend against the incumbents, because in these climate spaces, energy, transportation, food and land use, climate mitigation, on and on and on, there are incumbents because these are enormous TAMs. This
Right.
isn't, greenfield space where you build, Tesla and it's the first EV. We're kind of past all of that. These are pretty mature segments. You're often trying to penetrate and box out, markets that have incumbents. And so I think you have to start pretty defensible and then grow and scale. And one piece that we really, really like is where it's a multi-revenue business model type of strategy.
Yeah.
So for example, maybe it looks like a sensor company and it's easy to poo-poo those, right? Like there's lots of companies in that kind of like graveyard, but there's also some really large businesses on the back of it. Think of kind of, I don't know, Honeywell, for example. Anyway, so take a low-key sensor business. What does that company do? Well, it gathers new data that no one else has. And in a world of AI, your new data sets are particularly valuable. If you build that up, then maybe you're able to sell not just efficiency products off of the sensor, but you're able to sell insurance or financing or, something that's got a real network effect and flywheel. So we
100%.
like defensible, huge markets, land and expand, and then multi-revenue model.
I think climate has a lot of these, and you find them and you get excited by them, right? So thinking about even electrification and the data that you get when you tie in, like you said, sensors to what it's collecting about a single home or a single building type, right? Almost these niche building types, like how the different profile changes based on that. It could be, mobility, right? And transportation, how the different things you integrate into our transportation collect data over time. And there's a few startups that I won't name just because, they shared it with me in confidence, but I think a lot of people are thinking about this, especially as they have to bring out these AI products. So I actually want to ask you about that. So, I think a common sort of revenue stream to tackle or sort of a branding narrative to go after is AI, right? And you were at SF Climate Week. It was sort of a very much data center heavy, AI heavy. So I'd love to get your take on more, I think everyone's sort of understands that this is where the money is and this is where the hype is. But from your perspective, you talked about niche areas. I'm curious if you're tracking anything that's niche that you're really excited by, that's kind of maybe not 100% mainstream, but as a result of this big macro trend.
Can I tell you about one of our portfolio companies?
Please, yeah.
Okay. When you go to the grocery store, how much do your dozen eggs cost these days?
I mean, in New York, it's probably a lot more than Wisconsin. I'd say let's say 10.
Yeah,
I'll
it's
get
like
mine
$12
for my
for a
local
carton of
friend.
eggs. Oh, you've got an egg hookup. All right.
It's still $4 a dozen.
You're not the target customer.
This guy in Wisconsin has an egg hookup. All right. Well, for many of us, we're being impacted by H5N1 avian flu decimating, chicken laying populations. And tricky thing about avian flu is it's sneaky. It shows up on farms, often spread. This is crazy. I didn't know this until I started looking into the space. Often spreads through wild birds who have shifting patterns because of climate change. So they're flying different routes and interacting with egg-laying farmed chickens populations. And it's just extremely viral. So as soon as one bird has it, you're screwed and your whole farm essentially goes under, which is devastating. There aren't a whole lot of good insurance options for farmers. And this is like a real threat to their entire operation. And farming's just such a low margin business. So avian flu is a risk spread by climate. What do we do about it? There's a company called Barnwell Bio, and the team at Barnwell are deploying sensors. I would call them sensors. They have a fancy word for these biological assaying, devices that hang out in the drains to read wastewater analytics. When farms get sprayed down at the end of the day, everything goes down the drain. With that, washes away a bunch of signal. Wouldn't that be amazing if you could pick up on, rather than waiting for the animals to be symptomatic, if you could pick up on what's actually happening inside those birds, right, before they show you that they're ill or that they've been, at risk of H5N1. So Barnwell is able to do that. And the reason I like this business is not just so we can help the farmers themselves run better operations on feed your birds better food that they process efficiently, right? Like, don't need to over vaccinate them or put them through too many antibiotic treatments. Just do the ones that actually have, are efficacious. But it can also pick up on when they're at risk from a crazy outcome like H5N1. So that's good for the farmers. Turns out with scale, right, with enough anonymized aggregated data across all these farms, that Barnwell is sitting on a trove of information that no one else has, right? No one else is assaying the wastewater. And you can sell new products with that, right? That are customized to farms. Or you can help target folks that might want to shift their feed. Or you can anonymize that information and help pharmaceutical companies develop new vaccines. Or you can help the government go offer new insurance products to those farms that are, so much risk these days. So all sorts of things once you gather new data the hard way, but often you can do that pretty efficiently. Right. Aggregate it, anonymize it, run a whole bunch of different business models on the back end. So they're off to the races. This is a really young company. We're super lucky to partner with them out of the gates, and their story is spreading virally, shall we say.
This is the one person's trash is another one's treasure, right? This is that story. Right.
Exactly.
Yeah, we need to get them on the pod. I would love to learn more about that. There's a lot of interesting things. You're going to have to introduce us afterwards.
Love that. I think one of the most critical things from your perspective, from any early stage investing perspective, right, is navigating the competition dynamics. And you talked about this with a lot of the spaces that we're in right now are somewhat well explored. Like, there are very few sort of new things being discovered at this moment in time. And I think that's different than when it was, maybe 4 years ago, around the time that you were probably really thinking deeply about how to go about your investing journey. So I would love to actually ask you about that. I want to talk about the investing and fund journey. Can you walk us through how your view and insight into what venture investing in climate needs to be from when you started, and how it's, especially, we're talking right before this, some of the exciting things you're thinking about now?
Yeah, so tell you about how my take on the whole market and why start a new climate venture fund. Why does the world need another venture fund? Yeah. And I like the framing of the question of what's changed, and we can definitely get into that. But net, these timescales for venture and for the formation of new fund strategies are so much longer than, a 3-year or so cycle. We've really built Planeteer to be itself resilient and defensible and needed for a much longer time frame than, just past kind of like 4 years or so. And I think that we're in a better spot now, even than we were when it was still an idea that we were going and audaciously pitching to LPs a handful of years back. So let me tell you why that is. There are many venture funds that invest in climate, but about 2/3 of the dollars deployed into climate tech companies rounds, right, come from generalist investors that are dropping in to climate, but not specialized in it. And I think that's fine. I think it's actually pretty healthy, right, to have 2/3 generalists and 1/3 of the capital from specialized shops. Other notable piece of those, like 1/3 of the firms that invest in climate being specialized, you're correct that there is a big upsurgence in the formation of climate tech specialists kind of coming off of the clean tech 1.0 winter. Lots of those shops are not going to come back out to market for a fund 2 or for a fund 3. I also think that's fine, right? It's okay to experiment. It's okay for folks to kind of move on to the next thing, but that to me doesn't mean that they're like really specialists or that they're really thesis driven or thematic. We've structured ourselves to fit as climate specialist founders first check, and that we are lead investors. And so specialist fund, lead investor, there are very few of those. There are lots of early stage folks that like climate, but they're participating on a cap table and they're not rolling up their sleeves and kind of structured to be one of less than 20 companies in a fund. And then there's lots of later stage folks that like to lead, who sometimes will drop down into the earlier stages, but they're also not incented to roll up their sleeves and to really do the lead investor piece, right? With those early stage companies, they're kind of looking for a wedge in so they can get a ticket to lead the next round because they've got so much capital that they need to deploy that they can't really get it all out the door early. So it sometimes sounds a bit boring, but I think the structure really matters. I'm a big believer in like incentives and then like all else follows. So we will write about 20 first checks into 20 companies that we partner with. And I really see it as like 20 founders, right? Or founding teams that we're partnering with over the lifetime of this fund that will deploy over a roughly kind of like 5-year-ish, like 4 to 5 year period. Most of it, a little bit further up front. And when I say that we're leading these rounds, we're forming the round. So we're syndicating in the truest kind of form of that. And we're often helping these founders or giving them the confidence to jump and to actually go start that company. Yeah. So this was my hope when we set out to go raise and build Planeteer, and it has come true like many times, and it's the thing that makes me the happiest. But these are folks that we've gotten to know over a while from writing the CTVC newsletter and putting ideas out there, from rubbing shoulders with those 4 different climate founder personas, right, over time, and then engaging in kind of like constant discussion with people that might go start companies, so that when it's time, then we're like actually their first call. Right. What happens with like really good founders is if you get the first call, then the second call that they make, then almost always, a bunch of term sheets start showing up. And so we've got to be both like heavily prepared, deeply relationship driven, have a lot of trust, but then be able to have ball control to pull together a meaningful syndicate in which we're leading, but then we're bringing a lot of folks in that can add value alongside us. And so what do we tend to do? We're not getting all up in your code. We don't secretly run a whole recruiting service on the side. We don't also have a policy division. It's really, we're helping you navigate the climate capital stack. Right. Because we know how all of the capital in this space gets allocated and deployed. And so we think lots of these companies do well with upfront venture, but they don't only need to scale with that over time. We have every case study on every company in this entire space of how to go do that best. Yeah. And we happen to know almost all of those capital allocators on the other end. So the idea is, look, like if you're a founder, you're doing 100 things for the first time, or maybe the second time if you're a repeat founder. I only do a couple things, and I do them over and over again. So let me help you out with this one thing that I should hypothetically be pretty good at, and save you a bunch of time and stress, and we can, really build a meaningful syndicate of folks to help you scale up. So that's the gist. Seems to be working, fits particularly well for these founders who are sophisticated in wanting to navigate the capital stack, because it often means that they're pretty sophisticated as an indicator of how they might go about building their teams, or how they might build partnerships with early interested customers, et cetera, et cetera. So we like it as a signal just as much as a practicality.
Yeah, I think this reminds me of I think the question you probably get all the time, which is, how CTVC relates to your journey and where it fits in. I actually think the thing that I'm hearing here, and I would imagine this is how it plays out, right, in some of these rooms, is I'm guessing that this actually made a tremendous difference in your ability to lead rounds and actually do that syndication model. Do you think that your experience and journey with CTVC was an enabler to you being able to lead rounds?
Sure, no doubt. I mean, CTVC is basically Kim, myself, and the whole team that's worked at CTVC's brain on a page for the
Yeah.
last almost 6 years. You cannot hide publishing every week for 6 years. I think you can just go look at the website. I think we've done almost like 250, right? Like back to back weekly episodes, and then a couple hundred like deeply researched insights. So that's us. And just to be clear, it's not just me, right? Like CTVC is such a team effort, but it definitely expresses the way that I think. And I'm a huge fan of any of, I don't know, ways to do the one to many. And you guys are doing it with this, right? Like, how do you think? Well, it's how you ask questions and who you're curious to riff with, and how does conversation flow? What do you choose to talk about? It's a way of just the internet getting to know you. And so I like it from a exposure perspective. I think it's also been super valuable because it means I can learn a lot faster. So it's such a privilege to be able to email and pick up the phone and talk to people, because they're somewhat incented to talk to you because A, they know how you think and they trust you. And then B, they benefit from it because maybe you might help spread something that they're interested in positing to the world as well. So those are two like really big flywheels. And then I think there's also something to it of we really have tried to not gatekeep CTVC. So it's always been free and it always will. It's structured on the back end, so it's self-sustaining, and it's not just a blip in the blip in the pan or something. It's not just going to suddenly go away. So like you can rely on us, and we've shown that we do that consistently over time. And so I think there's something to the like certain types of founders like that vibe of the like give back to the community, meritocracy, we're all stronger together, etc., which is something that I definitely believe in, and I think that's how we tend to work with founders at Planeteer as well. So amazing way to learn. Of course, it's a great brand building exercise, but that's on a different timeline and for different outcomes, just to be clear, than my venture fund, right?
100%.
So I'm also a pretty competitive person. Like, I don't think all these companies are going to do great, you know? Like, I want to spend my time with the founders that fit my thesis and that I want to ride and support that upside. And candidly, I think the average outcome of the space will not be strong. I think there's a few really strong potential performers, and I want to team up with those folks. I want to cherry pick. I want to go all in. I'm not interested in index play. You know, that's why I'm kind of fine when people are questioning, oh, do we need to rebrand the whole space or whatever? It's like, doesn't really matter to me. Let's just go find the good ones. And so hence the like having the guts to do the concentrated early piece where you really got to believe that you can pick. And then you've got to pick the right people that you want to work with for an extended period of time.
Yeah. Let's talk about the picking, because I think we've talked about the sourcing and we kind of talked about some of the fun orchestration. So I'm gonna guess here. So you talked about wanting to see sort of maybe the more sales and execution style play, right? Maybe eliminating some of the science risk and kind of finding those things that have real commercial viability, like you were saying. Do you expect founders to have sort of come to you with a pilot or some version of that, or how do you gauge commercial traction?
Nope. Because we're often investing at the point of incorporation. So it'd be really nice, right, if there was already revenue, but there rarely is. So I'm looking for indications of what's about to inflect. And that looks different every time, but some recent examples, right? One founder that we're very lucky to partner with has done it before multiple times. He's pretty easy to underwrite in that regard. So that's kind of the most straightforward, right? If you've done it before in a similar space, you come with the relationships, you can land and expand. I think that you can get inside these enterprise customers, and then you can work with existing strong product people that you've worked with before and build faster than your, new grad who's in YC trying to do an AI startup. Like maybe that new grad is amazingly quick and nimble, but this founder can get in and then build in partnership with the team, right? So kind of like that as an indicator. Other ones for people who haven't done it before, which we're also excited to partner with those folks. They often come with just like a stack of customer insights. So I think I'm just really heavily gravitate towards you've got to know the customer. So we just invested in a company that is a land investing platform. So
Oh,
the
wow.
idea is highest and best use for your acreage.
Yeah.
This is not a space where I know a bunch of, timber people or
Yeah.
whatever CEOs, nor frankly is this person natively. But for the past 6 months, he's been going around to all of these conferences and getting in the face of folks that own forestry assets and learn, compound, share back, help, support. And now he's on stage at these conferences
Oh,
delivering
wow.
the like state of the industry thing in like 6 months, right?
Yeah.
And so that's like one other example. I suppose if I had to like really put like core thing on it, and this has been used before, and I'm not sure whose phrase I'm poaching here, but it's this like sense of being magnetic. So stuff comes to you. And I think that's often because you like structured things correctly, or you're
Yeah.
a unique person, but you're not. Yeah, it's like the good luck sticks to you more rapidly. And that might be talent, because often you're not going to be the best in the world at doing all of these things, but you need to attract the way smarter than you people, or that customers, or that's investment capital. You need all of those things in order to go build a great business. You can't have holes on any of those sides. So we skew like heavy in how do you think about your capitalization, and are you just like inherently commercial? And then are you just good stuff just keep on coming to you?
In that way, I'm curious. I think first thing I want to acknowledge sort of the complexity of what you're saying, but you're making it sound simple, which is great. Which is I think that there are a lot of spaces where the founder type and the founder velocity matters at different levels, right?
Mm-hmm.
I often think about this in the way that now depending on where you are, you might ignore consumer completely, but that's where sort of an incumbent doesn't win necessarily, right? It's sort of your best understanding. But in thinking about the industries you tackle, there, like you said, is this difference between sort of the young, scrappy founder who the generalization is that they go 996, they're working all the time, versus the experienced founder who can do more with less, right? They can kind of use sort of that one or two off connections. I think that also for a pre-seed investor, for an early stage investor, that also impacts based on who you're backing, what kind of resources you provide, right?
Mm-hmm.
So I would love to kind of track through the journey of how you support your founders. There's been a big change in the space, right, in the past year. And so that support might have changed. Maybe it hasn't, but I think that's something that'd be really interesting to learn from you, which is on the supporting side, what do you find is most valuable to founders? And also how has that changed, if at all, with the new administration?
Yeah, I tried to hit on this before of like how Planeteer is structurally differentiated. I don't want to work with folks. I mean, this is being brutal, right? Like, I don't want to work with folks who rely on me too much.
Yeah.
But I like partnering with people where it's just like really effective that we happen to be working on this problem together. So maybe there's a better word for that, but it's like this, there should not be any dependency, but yet often because there's no dependency, then we do end up doing quite a lot together. And so I turn off my alerts so I can see in the back corner of my eye that I've already, like, since we've been recording, I've got messages from 5 of our founders, right? Like, we're in constant contact. And I'm sure half of that is like, what coffee shops should I go to? I'm in town. But then the other half is like, hey, just be my incentive aligned thought partner in working through this thing that is just top of mind. And I haven't done all of these things before, right? So like, I don't have the right answer. This is totally their call. If I can help them framework and think out how to go solve some of that, sign me up. And you just earn that through trust and ways of working. And by saying, hey, I have no idea, but like, here's how I would think about it, or here's how I go talk to. Most of the value that I'm adding is being some broker connectivity, which is not that exciting, to be honest. But like, in some ways, I enjoy it because you're helping everybody out, right? You're not just asking favors on one side. It's like leverage, and it compounds, because then I get to sit at the center of that and help other people out, right? Finding nodes of value. So I do a lot of that, and we try to be quite efficient there because we sit on all of this unique funding information from Sightline. We can tap into that. And then we've got Planeteer's network. And between the two of those things, we have kind of most of the world covered. So we've got a lot of systems on the back end to make all of that connectivity really efficient from like my and our team's time, which just makes it faster, right, for the founder to tap into. And that generally tends to fall into bucket of like capital, capital, like early startup formation stuff, because we're first money in, everyone tends to go through the same stuff like in the first, couple of months, and then talent, and then customers and commercial. So those are the buckets that I support the most with for our companies.
Yeah, and I think there's something to be said for when you create content, you have to learn how to think through your framework, especially if you're writing. That's why I do podcasts. And
Mm-hmm.
like I said before, not great at thinking through this stuff and writing it down, but you can help them think through their ideas. So you mentioned earlier, you guys have a large focus on helping them navigate the capital stack. I'm curious how often you see successful companies need to partner with incumbents or with CVCs, for example. And if so, what are the important things to note to do that well? If they're going to partner with an incumbent or a CVC, like A, what kind of companies do you think should do that? And B, if they're going to do that, what are the core things to look out for?
Got it. Cool. Yes. And then in terms of, I know the phrasing, like the climate capital stack, is poetic and not exactly defined, but by that, the CVC or balance sheet investment is one slice of a pretty rich ecosystem of capital partners, which include everyone from grants all the way through to, final M&A partners, right? So we've got debt, we've got project finance, we've got corporate strategics, we've, on and on and on. And so interestingly, you'll find that in like lots of what we're going through right now is a bit of a kind of secular retrenchment. And in periods like that, CVC, so corporate venture capital shops, tend to play a bit of an outsized role. And I love these folks. They're often some of our closest partners, but just like saying the real thing out loud, that's often because they're on slightly different reactive timelines or speeds than maybe their pure venture brethren. Because VCs can kind of do whatever they want, right? Based off of what their LPs need and what their founders need. So you can be a little bit more reactive. You can hypothetically change your thesis as much as your LPs won't rap you on the knuckles. Pretty different from a classic CVC where your outcomes are dual mandate. It's not just go make the most money, right, over a time period. It's have a strategic outcome for the parent business and, go be an interesting investment often. And so they're more stable. That also means that they're slightly slower to come back into the market after a downturn period. But right now, where some of the generalists are off to, calmer waters, then CVCs are leaning in. I think that this go around, and it's impossible to talk about all CVCs with a single narrative or a single brush. I'd be like talking about all of venture with a single brush, right? Like, I think very clever folks sit in those positions of influence at the moment, often whom have a longer institutional memory than your average VC who's investing in the asset class. So often these folks sat through Clean Tech 1.0 and learn those lessons and still feel that and maybe had their job ripped out from underneath them, right? Like when Clean Tech 1.0 kind of came crashing down. And so they're some of the more nuanced, more diligent investor types who are asking the questions and therefore holding the valuation bar at a different height than more happy-go-lucky VCs. So I'd actually give like quite a lot of cred to those folks writ large at the moment. I'd also love to give them another shout out. Who knew I was such a fan of CVCs until we started talking about this? Another shout out, just the liquidity that strategics or big corporates play in this space. In fact, they are almost all of the liquidity. And some of those players are non-obvious. These are oil and gas companies that are hypothetically going through an energy transition, right? Wink, wink. These are financial services players who have large marketplaces and they want access to different data streams or novel underwriting platforms or anything that has to do with climate kind of risk and resilience. They're big hardware manufacturers, etc. So they bring liquidity. They're often bridging good companies and having to do a bunch of that complicated re-underwriting. And net, I think they play an increasingly important role, especially this go around, because they have the institutional memory.
Mm-hmm. Yeah. Out of curiosity, do you have any takes on whether or not a lot of these, especially in the hardware side, these new companies are going to actually become, the major companies someday? Because I always get worried that, in 100 years, we're going to see the same exact companies owning everything because they're going to acquire the new technology. Do you see, a lot of potential to actually build the new companies of the future who become the acquirers?
So far, we haven't seen a lot of disruptors that make it to IPO or to hyperscale independently. I think that's an enormous step for the space from a total returns perspective. And if you're in this, for the ultimate outcome of changing the world, I'm a bit of a climate realist, and I firmly believe, whether it's normatively good or not, that incumbents or existing institutions of power and influence are very likely to continue to have a lot of that over into the near future, right? So even though I invest in a lot of disruptive technologies, they often skew more enterprise grade of then working inside large organizations, be that everything from energy companies right through to government, or banks through to insurance companies. They sit inside and they either make something more efficient, so you do more with less, or they unlock net new ways of making money. Everyone likes that. And increasingly, they're also helping mitigate risk of running these large, enterprise companies, which my sense is, and we can maybe talk more about this, but my sense is, in a weirder, wackier, more volatile world, that in particular big enterprises are willing to pay quite a bit of money to understand the future and to not be caught, on their back foot. So we like those three categories of partnership, and that's quite a bit of what we've been investing into at Planeteer.
Yeah, I guess it would be interesting to see that if this starts to become pretty ubiquitous among big companies, maybe it's not necessarily they're always thinking about it in terms of climate, but it will become much more people will be exposed to, climate technology as we think about it. And they will start to realize like, oh, this stuff is not all that bad, right? And they, like where I come from in the middle of nowhere, Wisconsin, everybody thinks, if you work in climate, that you're automatically, a Democrat, for example. And it's just very interesting to see that some of these technologies would benefit places like where I grew up the most, and they're usually against it. So I hope more people get exposure to it. But I appreciate your
100%.
perspective.
Totally. And if the word climate tech is off-putting, which it probably is, because what the hell is climate change anyway, right? Like, climate change, technology coming for your jobs, that sounds risky, right? Or if we just call it, frankly, what lots of this is, which is do more with less, make more money, lose less money, right? Let's just call it what the thing actually does. So I think that some of the clearest or some of the smartest thinkers are the ones that can talk about this stuff the most clearly and with the fewest big science-y types of words. So I'm all about partnership and looping people who are actually, making and building and deploying real stuff.
I think the biggest letdown of this entire interview is how short this unfortunately has had to be. We are coming up on what I want to focus on, which is sort of the last major component, which is really getting into your mind and what you believe about the vision and the future for Planeteer. So I want to ask you, what do the next 5 years look like? But broader, sort of how are you thinking about the evolution of your fund?
Yeah, let me catch people up as to where we're at. So we're usually writing 500K pre-seed, so really point of formation, or 2 million seed. You've got a thing, you got some early customers, it's ready to go inflect and really start to run. Those are our two check sizes. And we've invested in just around 10 companies so far, which I'm jazzed to share more about soon. So come find me to learn more about that. Where are we going from here? Our structure seems to be custom fit to meet the moment, which is being a lead investor at a time where being a specialist and really, forming those early rounds matters and stands out. And then running without a parachute on our back, right? So that I can dedicate all of my time to our portfolio founders is just total treat, total privilege. I think we're incredibly well positioned, and I just frankly love everything that I get to do. So very pleased. Where are we going from here? We'll rinse and repeat, right? Thematically. I'm happy that though we're a climate tech fund, our theses that sit underneath that, we've got the agency to continue to update those as the space evolves over time. So where we started with a lot of hardware-enabled software, we're now increasingly leaning more and more into these enterprise partnership, risk mitigation, what does AI have to do with it, repeat founders, etc. And that will continue to evolve too, right? As the market does. So excited to rinse and repeat being a customized, thematic, really bringing specialization to the 7 underlying verticals. I think, though, that there's probably another act, another level for us to build off of. And what do we have that's unique, right? We've got this trusted voice. We've got access to all of this information, and we have the LP partners to back us up when we want to be pretty concentrated and go build new fund structures on top of the Planeteer platform. So I think you'll find us in the future, like building out additional fund strategies that are climate thematic, that are probably run by folks who aren't just me, right? Who are best in class at those slices of the capital stack, and that leverage data to really go meet the moment. And that's where I think this really starts to flywheel, right? So call it what you want, call it climate, call it your, energy abundance, on and on and on. We'll go meet the moment with the data, with the structure, and scale up a really proper, specialized lead investment lead platform.
So the Planeteer Capital stack, basically.
Yes.
Amazing. Sophie, this has been a huge, huge pleasure. We are so happy to have you on. Obviously, we're big fans of the newsletter, but even bigger fans of, you might not remember this, but I think this is back in 2023. One of the first episodes Silas and I ever did together was actually breaking down the announcement of your fund and what that meant for the evolution of media and climate. So this has been an amazing full circle moment. Yeah.
That's really neat. Well, thank you for doing that. And thank you for having me back. Hopefully there'll be more announcements and things that we can chew on together into the future.
Amazing. Perfect.
Absolutely. Thanks so much for coming on. Cheers.
Thanks, Sophie.
All right, everybody. Thank you so much for tuning in. If you enjoyed the episode, please share it on social media, drop us 5 stars on your favorite podcasting platform, and if you're feeling extra generous, subscribe on YouTube. We'd also love your feedback, so feel free to drop your feedback in the comments or reach out to Somil or myself directly on LinkedIn. Again, linked in the description. Thank you so much, and we'll see you next time.